Hi guys, welcome to the 13th episode of Trading for Beginners. On this video I'm going to be talking about time frames and forex trading. Like I explained on episode 12 on how to make a trading system, it is very fundamental and important that you understand time frame, and then for you to actually enter a trade you need to do a top-down analysis. So time frames, so the time frames can either be monthly, weekly, daily, hours, minutes. So when you are looking, so what is a time frame? To put it simple, so let's say you open a 1 hour chart. When you see one candlestick, it means that one candlestick formed in a period of 1 hour. So for you, if you're in a 1 hour chart, for you to have one candle, it will take you 1 hour. Does it make sense? So for example, if you are in a 15-minute time frame, it means that it takes 15 minutes to form a single candlestick. If you are in 1 hour, then if you are in 4 hours, it will take 4 hours to form one candle. So it means that when you are in a daily time frame, which is 24 hours, daily time frame 24 hours, when you open a 4-hour chart, in that particular day, if you say you mark beginning of yesterday in your chart, beginning of yesterday, it was maybe, let's say 12 a.m. to 12, or if you just use the period separator, and then you just see where there are dotted lines, which means end of a day. If you were to count the number of 4-hour charts, that will be the same as just dividing 24 hours by what? By a 4-hour chart, 4-hour candles. So 4 into 24, that will be what? So if you were to count 4-hour candles in a single day, that will give you 6 4-hour candles. So you need 6 4-hour candles in a day to form a 1-day candle. Makes sense? So now, time frame breakdown or multiple time frame analysis or top-down analysis. So one of the main reasons traders don't do well as they should is because they are usually trading the wrong time frame, number one, based on personality. It is known that new traders will want to learn how to get rich quickly, so they will start trading the small time frames like the 1 minute and 5 minutes time frame. This is very normal. Most people are newcomers on this thing. They think this is a quick get rich quick scheme, so they want fast money on 1 minute and 5 minutes. But in reality, professional traders trade from 4 hours and then they break it down, or even ways from monthly or weekly or daily, and break it down up until they reach 5 minutes. I'm sure most are just asking themselves, how do you do this? Well, it's simple, as I will explain in this video. So the proper way to trade a 4-hour chart is to do a top-down analysis. That is the proper way, guys. So how do you do top-down analysis? Basically, like I mentioned on episode 11 on moving averages, you basically need a 13, 50, 200 and then 800 EMAs, exponential moving averages. but for simplicity reasons I will use the 50 and 200 EMA to explain. So we know that price reverses by forming a peak. I'm sure if you have been following episode 10 which talks about chart patterns, you understand what I'm about to talk about right now. So for you to say this is a reversal, you need to see, I said the most important chart pattern, it's either you see a double top or an M, or a double bottom, a W, or a head and shoulder pattern. Or let me put it like this. Clear? So these are our reversal patterns. So what do you do now that you are anticipating to see? So like I said, where you see an M and a W formation is at level what? Level 3. And I explained on the previous video what level 3 looks like. So in this video I will start from the 4-hour time frame and then move to 1-hour time frame and then move to 15 minutes time frame, and then lastly I will talk about the 5 minutes time frame. So first of all, you see you anticipate an M and a W in the 4-hour, but then most of us don't really know what an M or W should look like. So an M or W should look like this is our M, and then the 50 has to touch there. So if you are in 4-hour time frame, you see price comes and touches there. What you do is you draw a line and then you anticipate that something in this area will happen. So use a what? A 50. So a peak will look like this. We have 50 there. So for simplicity, I'll use M's and W because these are the easiest to see. So from there, you start to do your top-down analysis as outlined next. So let's say this is a 4-hour. There is a rectangle which is purplish in color, and then we've got one which is red in color. So in real time, you will see something like this. Then you mark that point. You draw a line there. You go. So on H4, that's where you define your M and W. It has to touch. Once it touches, you now go to 1-hour time frame. On 1-hour time frame, you also anticipate an M, since this is an example. This example is based on a sale. So on H4 you saw price coming to 50 and then it reversed. You quickly go to H1. On H1, what are you going to see? You see the 200 from the point of contact. This was the point of contact. Let me change the color. This was the point of contact. So on a 4-hour, this would be what you will see, and then price moves up. What are you looking for in H1? You're looking for an M in H1. So you see price come and touch there. Once it does and then it moves up, you quickly move to, so this is what I was explaining, you quickly move to what? to M15, what are you going to see still on M15? Price will come and touch the 200. The white line is the 200. This line is the 200. Then from there, you go on M15. What are you looking for? So you expect price to move away from the 200, because on episode 11, I talked about a 50 EMA on H1 is equal to 200 on M15. If you go back to that video, it will be explained. So on M15, you expect a pull back from the 200 and rally to the upside. So what's next? The price has to form an M again. So it has to touch the 50 on M15. So this is basically the rule of 50s. I'll explain this in another video so that it's clear and there is less confusion. But this is the basic concept. And then from there, you then go on M5. So on M5, this is the time frame where you do your entries. This is the time frame of entry. It's not for gambling like most newbies think about Forex. So 200. So on M5, we're looking for price. So and you are still continuing. So you start on H4. Price does this, touches the 50. You move to H1. Price will be moving from 200 EMA, and then it does this. It touches the 50 on M1. So you mark there, you go on M15. This is the top-down analysis. Price will be moving from 200 as usual. So price will be moving. Then it touches again the 50 EMA, and then you move to M5. So on M5, I'll talk about the types of entries. You can have an aggressive entry or a conservative entry. So this is to play safe. I'm going to be using a conservative entry. So for a valid conservative entry, what you're looking for is an M. An M is formed again, and then price has to come back. This is a conservative entry. So price goes below or above after forming M and W, then the entry is on the first pullback. So for example, on M5, price will do this and then come back, and then you know that it's going. So you put your sell there, you sell here. Or if it was a buy, it will do this, draw a line here, price will come back and then continue going up. So this is an example, a V10S. So price touches there. So we have got an M. As soon as price touches then and then leaves, you go to this is from the 1 hour time frame. So what do you expect on 1 hour? Price will be moving away from this 200. So from this, price does this, that is the 50 on M15, and then you go on M5. On M5, price will be moving again from 200, and then it does this. This is it's 50, it breaks. So this is the 50, and then it retraces. So you draw a line on the neck of the M, it does this, it contact there, you sell, and then price continues to go down. So this is how you do top-down analysis. So what are other things you need to know? Additionally, I talked about counting levels on episode 12. It is very important for you to know your levels, because M's or W which are valid, they occur on level 3. If let's say it was a downtrend and you are in level 1, you can't expect a strong buy on level 1. You know that price will reverse strongly once it reaches level 3. So be patient and wait for level 3. On later videos, I'll also talk about trading the M15 time frame and how you can use the knowledge you have been accumulating by watching YouTube videos and make it a one solid thing. So you can also check out my video on best BTMM mentors who can actually help you. So important thing is do top-down analysis from either 4-hour or you can start from H1. And the most important thing, like I was explaining, so let's say you saw we'll highlight this one, you saw pullback, first leg was formed, it touched the 50 like I was drawing, touched the 50, you go on H1. So you know that on H1 price will be bouncing on 200. So what you see 200 there, price comes and then the 50 will be there, it comes and touches the 50 and goes back up. You know that the 50, if you go on M5, will be 200, and then you do so on so on. Thank you guys for watching this video. Please like, subscribe and share. Thank you very much. Have a wonderful day.